Hey, Jason Rivera here. Today I want to talk about, in the next episode of Value Investing in Your Car, I want to talk about value and valuation and me actually finding a company to potentially invest in for the first time in almost 3 years. The last time I bought a stock or bought a company on the public stock market was in April 2015 time frame. I haven't bought anything since then because I can't find anything that's undervalued enough that fits my specific criteria. Everything I have been finding or have found in the last 3 years that was undervalued, or let me step back. I've found that the companies in the last 3 years fit into three separate categories. They're either crap, they're fairly valued, or they're massively overvalued. I found 0 companies in the last 3 years that fit my ultra strict criteria. So what's changed? The stock markets continue to go straight up, and until recently I haven't even been looking at the stock market for public investments at all, because again, the stock market's been going straight up. Valuations are still insane. Having said that, you still can find value on occasion. It just takes a lot more work, and especially in a rising market, value investing, like I talked about in one of the previous episodes, works best in either a falling or stagnant market, some kind of recession, depression type situation. That's when value investing works best. Stock markets continue to go straight up. So why did I recently begin looking at public company stocks again? One is so I have, now that my team is set up and helping me with a lot of the back end stuff, I have more time to do it now. And B is one of my coaching clients. We're going through, we built the foundations in November, December, and now we're going through case studies. Now that he knows the basics, and actually more than the basics, he can now evaluate companies completely by himself. He just needs my help kind of to point out some of the nuances on here and there. But so now we're going through companies case study style, one by one, going through the financial statements, going through their ins and outs of their footnotes, what certain things mean, what certain risks there could be in a particular investment, things as detailed as how to calculate total enterprise value, and what's an example, what an operating lease is, why it's capitalized in the total enterprise value calculation, how to think about deferred tax assets and liabilities, how to think about things like net operating loss carry forward, stuff like that. So we've been going through these companies case study style, and we've gone through, I want to say close to a dozen now, and they've been the same thing. They've either been crap, just totally awful businesses I would never invest in no matter what. They've been massively overvalued, and actually that's it. We haven't even found anything that's been about fairly valued. So I was surprised when we began evaluating a new company that's been, actually I've owned it for several years now, and it's continued growing its operations, it's continued doing well, it's continued producing more and more cash flow, more and more, higher and higher profitability metrics. I think if I remember correctly, they've more than tripled their revenue since I originally bought them several years ago. So I was a little surprised to see that they are massively undervalued. I believe their share price right now is $40 to $50 a share, somewhere in that neighborhood. I don't look at share price very often, so that's why I can't remember the share price. But their intrinsic value, their conservative intrinsic value that we're calculating right now, again, I calculate all valuations exactly the same, except for insurance companies, those are slightly different. But all kind of normal companies, I calculate exactly the same on these, just to keep things as apples to apples as possible. In this case, they're somewhere between on the current market, their current market price is between $40 and $50 a share, somewhere in that neighborhood. We, on a conservative basis, found them to be worth between $90 a share, and that's kind of the higher, more what I would say realistic, real world value of the entire company today, between $120. So between $90 and $120 a share is what we estimate their value to be worth. Why? So why is this when it's a small cap company? It's under, let me see, I think its market cap's around $700 million. When I first founded it, its market cap was around 500, so it's gone up. It went over $1 billion at one point, and then it dropped way back down. Why? At this point, we haven't finished analyzing them, which is why I haven't written an article about them or recommended them to anybody yet. We found, at this point, again, without going through all their press clippings, all the recent news, even all their financial statements, or as many financial statements as I normally go through, we haven't gone through all those yet. I haven't seen any major risk factors of why their share price dropped so much. If I remember correctly, I think they're selling, again, between $40 and $50 a share. Now, at one point, they were over $75 a share. Why was there such a massive drop in their share price with the stock market going straight up? Haven't found that information yet. So, again, that's why I haven't recommended it. That's why I haven't written it up to anybody. But the whole point of what I'm telling you or talking about today in this episode is that as value investors, I know over the past 3 years I've been incredibly frustrated for the most part looking at companies. Again, they've either been terrible, massively overvalued, or about fairly valued. Nothing really is undervalued if it's even a somewhat decent company. Even Benjamin Graham and Camp companies, even if they're terrible, I can't think of anything off the top of my head that was just absolutely terrible and they were burning a ton of cash that was selling below Benjamin Graham's NCAV number off the top of my head. So you still can find value in these kinds of up markets and what I would deem massively overvalued stock market. But again, I've been saying that for, I think one of the previous episodes, I've been saying that for 5 years now. So what my point is in all of this is that maybe something you currently own, maybe something you've looked at in the past, maybe something you've considered or that you're considering investing on your watch list instead of looking for new companies, maybe something on your watch list or something you currently own is undervalued as its profits have continued to rise, or in compared to its profits as its profits have continued to rise. Obviously, the valuation changes on pretty much a quarterly basis because the new numbers come out, the new profitable numbers come out, their new balance sheet numbers come out, all that. So you should evaluate your companies, even the ones you own, at least, I try to do it at least on a yearly basis, just to see A, if any major news has happened where I would want to sell them, or B, just to kind of get a new range of where they're valued at. And I haven't, in this particular company, I've owned it for several years now, and I haven't done a full evaluation of it in, I think, since I bought them, and this was all several years ago again. So I don't always stick to that, but you should probably evaluate them once a year, and you never know what you might find. You might find something right under your nose that is massively undervalued compared to the profits it's producing now. And at this point in our early analysis of them, nothing economically has changed for the negative. If anything, they've gotten a lot better in pretty much every aspect of their business that we've evaluated so far. And I haven't found any new major risk factors in potentially owning them. Again, we haven't finished the analysis yet. We haven't gone over all their financial reports yet. We haven't looked at all the news and what could have happened, what could have caused their share price to drop so massively in, I think it was a month time period where it was up around $75 a share and then it dropped somewhere in the 40 range. Again, having said that, at this point it looks like even better now than when I originally recommended it several years ago. Again, on a preliminary basis, before we finish everything, it looks more undervalued relative to its profitability and free cash flow now than it did then. it's continued growing its operations. So hopefully soon I will have a recommendation issue or a recommendation report. I'm not really sure how I'm going to do it anymore since I'm not producing the press on research issues anymore because of just because I haven't been able to find anything to buy. So, and I don't want to just do a one-off issue of press on research either. So I'm trying to figure out how to, once I make a decision on this, if it is a buy decision I recommend to buy, I'm trying to figure out how to get this issue kind of out there, recommendation out there, so everybody can kind of see and learn from the thought processes and all of that. But hopefully soon I will have some kind of report or video or case study or live webinar or something going over this company and this recommendation. But the thing I kind of wanted to get across, my main point here is that I wanted to get across is that you still, even in massively overvalued markets, if you look hard enough and look long enough, you still can find assets and companies that are undervalued. It will just likely take an immense more time. Like I said, this is the potentially first company I'll recommend and buy in almost 3 full years now. So it's been a long time, and I'm excited to be back and looking at companies again, and potentially for the first time in 3 years, in potentially investing in a new company, or in a company I still own, but in making a new investment in that company for the first, or making any kind of new investment in 3 years. So I just kind of want to let you know that, and I will talk to you probably next week again this time. Thanks for listening. If you have any questions, comments, concerns, let me know in the comments below, whether you're watching this on the blog or YouTube or wherever you're watching it. Make sure to subscribe, share if you like it, and ask any questions if you have any value investing, finance, learning, mental models, behavioral finance, any kind of questions like that. Let me know. I'd love to answer them on these episodes. And because if you're wondering it, other people out there are probably thinking about it or wondering it too, so I'd love to answer your questions. Please leave those in the comments below, and I'll get to any that are asked. Thanks. Have a good day. Bye.